Good day. Welcome to ACE390 Taxation Issues. Today, we would like to present the tax planning strategies for Malaysian public listed companies, a case study of NovaEdge Berhad. I am Rugawai, the group leader, and these are my team members.
Abstract. This study examines the intersection of tax compliance and optimization at NovaEdge Berhad. We address the critical issue as tax leakage, where companies lose capital due to misinterpreting complex tax law. By reconciling audited financial data against the Income Tax Act 1967, we apply a strict legal filter to every expense. Our finding prove that a meticulous tax planning is more than a technical task. It's a vital governance tool to protect cash flow and ensure long-term business resilience in Malaysia. Introduction. Taxation is often viewed as a mechanical obligation, but for companies like NovaEdge Berhad, it is a heartbeat of corporate strategy. The primary challenge we face is that accounting and taxation speak two different languages. While accounting measures the true and fair performance, the RIB operate under Income Tax Act 1967. This study bridge the gap. We are looking for loophole. We are performing that to show how professional judgment and statutory review can protect companies' financial health. By the end of this presentation, you will see how moving from raw accounting profit to optimized taxable income is a vital skill for sustainable corporate governance in Malaysia. Company profile. The NovaEdge Group is diversified ecosystem working in regional harmony. Our KL headquarters is the strategic mind using group tax relief to ensure financial resilience. In Penang, we drive innovation through R&D initiative, while our Johor property and Perak agriculture sector leverage specialized allowance for infrastructure and sustainable growth. Finally, our Singapore hub manage our global trade via straight up length standard. Together, we harmonize this unique industry strategy to create a borderless, compliant, and highly competitive corporate family.
Problem statement. NovaEdge Berhad is a fast-growing group with business in manufacturing, property, agriculture, and international trading. While business expansion has been successful, the group tax management has not grown at the same pace. The first major issue is tax compliance. Nova Property faced penalties due to a late payment of service tax, while Nova Manufacturing failed to remit withholding tax on royalty payments to a foreign company. There are also transfer pricing concerns where profit margins appear higher than market levels without sufficient supporting documentations, so these issues expose the group to penalties and audit risks. Next, the group is also not managing its tax positions efficiently. Nova Manufacturing suffered significant losses, while Nova Property remained profitable, yet group relief was not fully utilized. In addition, technical rules such as interest restrictions increases the risk of incorrect tax claim. Finally, Nova Edge faces uncertainty in planning future investment, especially in green projects due to a lack of clarity on suitable tax incentive. Overall, these challenges highlights the needs for a structured tax review to improve compliance, reduce risk, and support better strategic decision making.
Methodology. Our methodology employs a mixed methods designed that bridge the gap between accounting and law. We begin by interrogating the company's internal financial record to identify the permanent and timing differences between accounting standard and tax requirement. Crucially, we don't just crush the number, we apply a legal lens using the Income Tax Act 1967. By applying the Section 33(1) only exclusively tax to every expense schedule, we ensure that every deduction is legally defensible before it enters our financial model. Moving to quantitative core, we perform a step-by-step transformation of accounting profit into stationary chargeable income. This is where we adjust for non-deductible item and optimize for capital allowance. To demonstrate the real-world value, we conclude with a comparative impact analysis. By modeling a baseline compliance scenario against an optimized one, we quantify exactly how informed tax planning strengthens a company cash flow, a financial resilience. Ultimately, this framework provides a transparent roadmap for better corporate governance.
Now, I would like to present the analysis and findings in our case study. The most significant tax impact arises from tax incentive, particularly pioneer status and investment tax allowance. Based on the group projected profitability, this incentive generate the largest tax savings, exceeding RM 10 millions over the incentive periods. PS provides a partial tax exemptions on statutory income, while ITA allows additional deductions on qualifying capital expenditure. Therefore, adopting a combination of ITA and pioneer status is the most tax-efficient strategy for the group. Under Section 44A, Nova Manufacturing can surrender part of its current year losses to Nova Property, which has taxable profits. This allowed the group to offset losses against profits within the same year, resulting in a tax saving of approximately IM 287,000. This demonstrates effective utilizations of good relief provisions. A transfer pricing audit by the IRB adjusted the markup price to related party transactions to an arm's length level. This resulted in an increase in taxable income and an additional tax exposure of IM 864,000. This highlights the importance of maintaining proper transfer pricing documentations and pricing policies. Non-compliance with withholding tax and SST requirements lead to penalties and the temporary disallowance of deductions. These issues increase the group tax costs and expose it to compliance risks, emphasizing the importance of timely tax payments and internal controls. Certain income items were correctly classified as capital in nature, such as foreign source dividends and gains from disposal of shares. As these are not taxable under Malaysian tax rules, the group achieved substantial tax savings by correctly distinguishing capital gains from revenue income. Overall, despite some compliance issues, the group achieved net tax savings of approximately RM 9.1 million. These savings were mainly driven by tax incentive, exemptions, and effective utilizations of allowable deductions.
Hi, my name is Teng Wei. Let's proceed into discussions. NovaEdge Berhad's tax planning is practical and compliant with Malaysian laws, effectively addressing its diverse business needs by utilizing strategies like group relief, interest restrictions, and tax incentives. The company minimizes its tax burden, boosts after-tax profitability, and improves cash flow, while staying within legal limits. This demonstrates a solid understanding of tax legislation's impact on business. On the other hand, NovaEdge's tax approach aligns well with industry practice. Similar to what large Malaysian corporates are doing, they apply Section 44A for group relief and Section 33(2) for interest apportionment, which are common strategies in the sector. However, when it comes to transfer pricing, there are typical risks, especially with cross-border dealings involving Singapore. To manage these risks, it is crucial for NovaEdge to maintain proper benchmarking and arm's length documentation.
Okay, so now we'll move on to the recommendations. To enhance tax efficiency while managing regulatory exposure, NovaEdge should adopt a balanced approach that integrates tax planning with strong compliance and governance. One major area requiring attention is transfer pricing, as frequent intercompany transactions increase the risk of IRB adjustments and penalties. This can be mitigated through robust benchmarking and documentation aligned with arm's length principle. In terms of incentives, NovaEdge should adopt a strategic rather than a fragmented approach. For example, pioneer status is more suitable for long-term profitability, while ITA provides earlier tax relief during capital-intensive phases. The allowance for increased exports should also be closely monitored to maximize post-tax returns. From a governance perspective, tax compliance should be centralized at the holding company's level, with standardized procedures for SST, withholding tax, and filing deadlines. Regular staff training, interval tax reviews, and the use of advanced pricing arrangements would further reduce audit risk and support sustainable tax efficiency. In conclusion, the case shows that NovaEdge Berhad successfully leverages Malaysian tax laws to achieve tax efficiency within a diversified corporate group without breaching statutory requirements. The case contributes to practice by demonstrating how tax planning is embedded in financing, investment, and operational decisions, and to theory by reinforcing core principles such as capital revenue distinction, the wholly and exclusively test, and substance over form. However, the analysis is limited by simplified assumptions and the exclusion of audit risk and regulatory uncertainty. Future research could enhance this study by examining tax audits, legislative changes, sustainability-related incentives, and international tax interactions to provide a more comprehensive view of corporate tax planning in Malaysia.